Today we'll continue what you did with the video, watching that forensic file video on mold in Texas, the Baldwin case, an interesting case. And so our goal today is understand what does this mean to the industry. I'm going to give you an article, the first article, which you're going to find is probably more industry biased than the forensics file video. I'm trying to give you both sides of the argument here. The industry feels very strongly that they were abused in this particular course of claims. I'll give you some insight as well with what the commissioner of Texas said. He came and spoke to our class a few years ago. In fact, twice he came and spoke to the class, and I don't like asking him anymore because he drives all the way from Austin and he's getting up there in age. So I don't want to be responsible for him being in an accident or something. But very, very interesting, very, very brilliant man, and he gave some insights on these cases that I think you'll find interesting. Then the tough part, which a lot of students struggle with, is, and I'll do my best. The second issue is storm surge, and storm surge is still an issue. The mold issue is somewhat quieted down, but it still has a lot of features that you can apply to other parts of insurance, and I think it gives you great insight into property casualty insurance industry. And so the key is to make the connection. What is similar about the storm surge issue and the mold issue? How do these two relate? And it really comes down to contracts, how contracts are written, how contracts are interpreted, and also just the public relations that you see in the insurance industry and how they often shoot themselves in the foot on these issues. So we'll see. It's an interesting case. The storm surge, it's almost a soap opera when you read it. We'll go through it kind of quickly, but I think it gives you some great insight in this industry that I don't think we can get any other way. So we have this article. It's an old article, 20 years old, but think in terms of not so specifically mold. We'll definitely talk about mold and some of the issues, but at the same time, I want you to think broader. What does this mean for the insurance industry? Why does the insurance industry have issues like this come up that look so bad in the press? They're usually the ones that are beaten up in the press, and they tend to be because of the nature of insurance and the politics of insurance. They tend to be the ones who take the brunt of the anger of consumers. So let's understand this. There's some key issues in here that when you discuss this on the exam, you want to make sure you get the story here. So I'll try to highlight those things. We're not going to read the whole article. I'm just going to emphasize the highlighted sections, and then I'll give you an overview or an outline from the class notes. So you start off with the state of Texas being an extremely expensive state for homeowners. It might be the most expensive state in the country. It's possible states like Florida or California, when you really look at it, are more expensive because of hurricane risk and earthquake risk. But Texas has everything. It has hurricanes, it has tornadoes, we have Tornado Alley, we have winter storms, which, because Texans can't drive in ice, winter storms tend to be an issue. Huge hailstorms are an issue. Flood has been an issue in certain places. We saw that with Harvey in Houston. So everything, and we don't have the earthquakes, although there are faults in Texas, but Texas tends to be a very serious state when it comes to homeowners, especially catastrophe risk. So Texas insurance costs are more than any other state in the nation. They're 83% more than the national average, and that is before this mold issue hit. So Texas is already almost double the national average, and Texas insurers are calling for steep increases on top of that because of what we call toxic mold. And that's a key term, toxic mold. Obviously, that gives it a little bit more stress in the press. So they wanted to increase another 40%. So key to your answer when you're answering this is, remember, we're always thinking in terms of frequency and severity. So let's look at this issue in terms of frequency and severity. So insured losses from water and mold damage in Texas reached at least $780 million, up 60% from a year before. Now, why is that? Is that 60% increase? Is that because of severity, or is it because of frequency? The answer is both. Both frequency and severity. So how do we define frequency? Frequency is the number of claims. All right. So the frequency has increased fivefold. The number of claims being submitted to insurance companies is up fivefold. That is frequency. The average cost per claim is severity. The average cost in the claim has gone from $3,000 to $38,000. So the number of claims is up fivefold. The average cost per claim is up, that looks like 12, almost 13-fold. So yeah, huge increase. And so you're seeing this massive increase in claims because of both frequency and severity increasing. There's some issue that the severity is up because there's these companies that are price gouging on mold remediation. Because this hit the press and the Baldwin case, the forensic file video that you watch was a big part of this. It hit the news, and suddenly when you see their story and you see how it affected the husband and the child and the son, people start worrying, and now you have these firms coming around and saying, yeah, you got mold in your house, and people are like willing to pay whatever. That's part of it. So there's some fraud going on as well. And the players are important. So it's another thing, make sure you're having your notes. Who are the players? Obviously it's the insurance companies. Obviously it's the homeowners, but we're going to talk about the homeowners in two groups. One group are those that are filing claims for mold. The other homeowners that aren't filing any claims, but they're seeing their homeowners insurance rates increase 40, 50, 60%. So we have the homeowners, the insureds. We have those remediating companies that are going into houses and saying, hey, you've got mold, let us come fix your house. Another group of players is the real estate market. Real estate brokers, mortgage bankers, home builders, the whole real estate market. The real estate market, especially in the state of Texas, but it's probably true in most states, has tremendous political power. So when the insurance industry says, hey, legislators, we're getting beat up, we need your help, they don't get much sympathy. But when the real estate industry comes in and says, hey, we can't sell houses, boy, that gets legislators' attention. And so that's a strong player in this market. Why? Because with homeowners insurance prices soaring, people were stop buying houses because they couldn't afford the insurance. So real estate brokers, bankers, home builders, they were all coming to the state and saying, you got to fix this problem. That's probably what saved the P&C industry, is having this strong political force, very strong lobby group come in and say, you've got to fix this issue because Texas insurance companies refuse to sell insurance and we can't sell houses. So what are the legislators just looking at? Regulating rates. We're going to talk about these Lloyds and county mutuals. So Texas regulates insurance rates within a band. As long as you're within a band, you can charge the rate you want to charge. If you got to go outside the band, outside the range, either too low or too high, then you're refused. You have to get special permission. However, there are special insurance companies that can avoid that rate regulation. County mutuals, Lloyds, these are special companies, and almost all large Texas insurers have these special type of insurance companies. I know UTSA own the company, a couple of them, and they somehow get around from the regulations. So one thing they're saying is let's let the state get control of rate regulation for these right now unregulated companies. They want to have new standards for those firms that are doing mold remediation, because there was definitely some fraud going on there. I remember at the time I was helping a family move out of a house that had mold problems, and they had a mold remediation company coming in, and my guess, just looking at the house, was it was an entire waste. The house, I really seriously doubted it had a serious mold issue. But after you saw the Baldwin case, you obviously don't want to take chances. But oh, that house is just being completely rewired. All the floors knocked out. There was one place I opened the door. It was the bathroom, but opened the door and there was no floor. It was extremely it was a two-story building, two-story house, and upstairs I opened the bathroom door and there's no floor. It was just, you would have dropped 10 feet. Very, very dangerous, but completely gutting the entire house. Based on what? Well, maybe faulty air quality testing. So my sense of this, and you're probably going to say, wow, you're too biased toward the industry. But my sense, just having been there and having seen people, what they were doing to their houses, my sense is the Baldwin case was a fairly unique, extreme case. Something really quite radically wrong went on in that house. But that a lot of other houses had really pretty minor problems that just a little bit of Clorox or some bleach would have fixed. And yet they were spending thousands having their house redone because of what they heard about the Baldwin case. Part of the problem is home construction and how homes are constructed in Texas, making mold more likely. So that was part of it. And then just understanding, how do you test these homes to know whether one's dangerous or not? And that's a big deal, especially for the insurance industry. If you're going to spend $20,000, $30,000, $40,000, $50,000, and boy, the house I was looking at, it was almost like they were tearing down and rebuilding a house. So you can think about the Baldwin house from the video you watched. Probably the only solution there was to tear the house down and start over from scratch. So, you know, if you're doing that, if you're doing radical, massive reconstruction of a house, but you don't really need to, because the mold is not that dangerous. You know, think about this: the insurance industry saying it's not that dangerous, and yet everyone's pointing to the Baldwins and saying, "Well, you were wrong on that one." It was a tough position to be in. So, homeowners exposed to toxic mold, alleged adverse. Now you see how this article is a little bit biased. Alleged adverse health effects. An evaluation and remediation of mold contamination can displace homeowners from their homes. So remember that additional living expenses. So if you have to leave your house while it's being rebuilt essentially because of mold, then you get paid. You're paid to live in an apartment or a hotel. Consumers are leveling complaints against new home builders, faulting them from shoddy work. So there's a lot of people being blamed here. Here's the Baldwin case. I'm sorry, Ballard case. I've been saying their name wrong. Ballard case. So Dripping Springs, $32 million lawsuit against farmers because of delay in remediation repairs, and it allowed toxic mold to spread throughout and it's a massive home, 22 room, and they say new home. It's pretty amazing to me that it's a new home. That home, just looking at the video, that's not the type of house I would want to live in. It was very, very dark. That's, you know, somewhat what I guess houses were like back then. Today we like them open and airy, a lot of light, but a very dark house. The inside of the house was really dark, and the furnishing and the color choices were really dark. So the house looked very old and very ancient, but supposedly it was a new home. They asked for $25 million in actual damages and $75 million in punitive damages. The judge excluded expert testimony regarding health effects. Now that's something obviously the insurance industry is very upset about. So farmers, after they lost this, and other insurance companies, they said, you know what, we're not going to sell insurance in the state to new customers. And the other thing that was happening is really, really interesting back then. Some of you might not have been alive when all this was happening, but I remember that really clearly. People were not filing claims. So what was happening is, if you filed a claim for anything, not just mold, but anything, people feared if they filed any claim with the insurance company that they would be canceled, because insurance companies were canceling policyholders. And so essentially people were self-insuring. They were buying homeowners insurance, but they were never filing claims because they're worried they would be canceled. So if they had a fire in the kitchen or a fire in a garage, they would just repair it, pay it for themselves, and never tell the insurance company about it. We'll talk about the final solution. That the TDI is the Texas Department of Insurance. They released a proposal Theirs was the cap mold damage to $5,000. Now, obviously, we saw the claims were going from an average of 3,000 to 38,000. So that's obviously going to cut quite a bit. But even with that cap, Farmers, State Farm, Allstate, Safeco, that write more than 50%, they said they were going to discontinue selling property insurance in the state. This is how you get the real estate brokers on your side. The real estate people, they don't care that much about this issue, other than they can't sell houses if people buying houses can't buy homeowners insurance. And so by threatening, so this is the power the property casualty industry has, is they can say, hey, we just won't do business in your state. And it's kind of, I'll take my toys and go home kind of argument, but boy, it's powerful, because you've got you got a weak lobby, which is the insurance industry, that can awaken a sleeping giant, the real estate and mortgage bankers industry. And so they're saying we can't sell houses, we can't close on these properties, and because our potential buyers can't buy insurance. Insurers complain for unscrupulous contractors preying on consumers. I do think that was going on. I remember back at that time, a good friend of mine, he said that a friend of his had called and said he was going to quit his job and get into this business, going house to house and scaring people to death that they had toxic mold in their house and needed to be fixing it. So again, you're getting my biases. I don't think the Ballard case, listening to that forensic file, I think that forensic file's video, it seems like they really and truly were very seriously harmed by the mold in their house. So my question is, how extreme, how unique was that one case? Was that really going on around the state? People were having serious memory issues, serious health issues. So you feel sorry for that family. The father and the son were definitely, it just seems obvious that they were very seriously harmed. And it does seem like the toxic mold was. There's that one place in the video you notice where someone walked into the house and just within a few minutes he was overcome by the toxic whatever fumes there were. So it seems like that house was really overwhelmed. But the houses I went into that were having these mold issues, boy, you sure didn't notice that. This seemed like a normal house except for missing floors on the second floor. So the question is health issues. So this part of the article gives a little bit of the industry side of the argument. While mold is a common problem, it can become serious when spores multiply unchecked on wet, porous materials. According to U.S. Centers of Disease, no conclusive links have been established between mold exposure and serious health problems. No conclusive links. So it means there is some evidence, but it's not overly conclusive. But people with special health issues, allergies, suppressed immune systems, they can be more sensitive to the molds. While no official government studies support claims of adverse health effects, some doctors in private practice assert otherwise. Chronic respiratory infection, asthma, skin rashes, chronic fatigue, short-term memory loss, anxiety, depression, headaches, nosebleeds. Because insurance companies did not respond quickly enough, their families became gravely ill, and even their pets died from exposure to toxic mold in their homes. Now they say toxic mold as if, and maybe it's some new thing has come along. You can find toxic mold back in the book of Genesis, I think, or maybe Leviticus. Back in biblical times, they were talking about this exact thing going on in houses. So this isn't some new disease that's suddenly come along like COVID-19 or something. This is something that has existed for millennia. The exposures to mold does not cause illness in all people. Variation, and you saw that with the Ballard case. The wife seemed to not be affected at all, and yet the husband and son were. So maybe there's a few things going on. First of all, the Ballard case might have been an extreme case of mold, where it just really grew rapidly, maybe because of the size of the house and the water damage that was done. You might have also had some physical nature related. Maybe the husband had a special type. Maybe his immune system was very different than the wife's, and since the son, and he got his DNA from the mom and the dad. Maybe he had something similar to the dad, where they were just susceptible to mold, where the wife wasn't. So maybe, again, the Ballard case makes it with some unique, not that I'm trying to argue for the insurance industry side, but it just seems to me there's something more going on with the Ballard case than you might have seen the rest of Texas, but I can't prove that. I don't have the data. Exposure to mold did not cause illness in all people. It made it difficult to establish standards for what are acceptable levels of mold. It just depends on who you are. So to what extent should a state regulate rates and coverage for water and mold damage in Texas? And so in Texas was unique in that most other states didn't have this problem because their policies were very strictly written that if you had a water leak, that you had to report that water leak within a certain amount of time, or any mold or anything coming from that was not covered. In Texas, that time period was not clearly stated in the policy. So you could have had water damage 30 years ago, and today is the mold is starting to accumulate because you didn't take care of it, you didn't clean that area, and you just let it fester. And it's usually pretty obvious. If you have mold growing in your house, you're going to see it. And it is an easy thing to fix. You know, get some bleach out and mold is very easy to kill. I think in the Ballard case, it was happening behind the walls, behind the refrigerator. They didn't see it because of where the water damage was. But someone who's had water damage a long time ago and it festers, Texas was unique. Other states did not have this issue. And that's really, really critical to what we're talking about here. On both mold and storm surge, make sure you have in huge letters in your notes, we're talking about how the insurance contract is written. Because that is going to determine what the insurance company covers, but it's also going to be interpreted by the courts. And how the courts interpret it, that can change the pricing of the policy. The actuaries are assuming a certain interpretation of this language in the policy. If courts reinterpret that, then the actuary is going to have to reprice their policies. And that's when they come back to the states and say, hey, we need a 60% increase in our rates. Because if you're going to take that interpretation of the contract language, we're not charging enough for our insurance. So the state of Texas has a benchmark system. So insurers, they can charge 30% more or less than that benchmark. And as long as they do that, they don't have to get state approval. If they go outside of that, they have to justify it. We're going to talk about what that means to justify the rates when we talk about credit scores and auto insurance in particular. What do insurance companies have to prove to allow them to charge more or less? Over the past 10 years, insurance companies have shifted more and more of their business toward unregulated branches. They're called Lloyds. They're also called county mutuals. There's a couple of them. So the legislature exempted Lloyds plans from the benchmark rating system because they comprise only 20% of the market and covered specialty risks. So the insurance industry said, you know what? We'll just start moving more of our business to Lloyd companies. So what happened? The Texas Department of Insurance estimates that about 95% of Texas homeowners policies are now in Lloyd companies. You can see if you don't allow a business to charge the prices they want to charge, they'll either stop selling that business or they'll find some way to get around the law. So a state consumer watchdog agency recently filed a proposal to prohibit insurance companies from refusing to insure homes because of prior water damage claims. So this is an interesting, we'll talk about this with when we talk about catastrophe risk and also auto insurance. There are some states where auto insurance is a horrible business. And there are some states where homeowners insurance is a horrible business. So Florida is a terrible state for homeowners. Texas during the mold crisis was a terrible state for homeowners. Michigan, New Jersey were terrible states for auto insurance. And what some states have tried, you might think this is unconstitutional, but what they have tried is they've told insurance companies, hey, if you're writing auto insurance in our state, you have to write homeowners in our state. If you shut down your homeowners business in our state, we will also unlicense you for auto insurance. That seems unconstitutional. We'll talk about what the McCarran-Ferguson Act says about insurance, and what the U.S. Constitution says about interstate commerce. That seems like that would be illegal. That'd be unconstitutional. I don't know why the insurance industry hasn't taken that to court. But imagine being in a business where you're losing a lot of money, and the state says you've got to keep doing that business. You have no choice. Doesn't matter how much money you're losing. We're going to force you to keep doing business in our state. If you don't keep writing up business that's losing you a lot of money, then we will not let you do any business in our state. We will completely shut you down. That's pretty ridiculous. So they noticed that more than 90% of insurers refused to sell homeowners insurance if a consumer had made any kind of claim on the previous policy. So you can see why people stop filing claims. So Texas generally pays more for homeowners. Why is it? Because it's more expensive. The severity and frequency in Texas is much higher. We already talked about this HOA, HOB, HOC. So 96% of homeowners have B. We talked about that. That's that policy we looked at. It's replacement cost for most kinds of damage. Mold damage is covered if it results from a covered loss, such as a roof, plumbing, or foundation leak. So that's important. You know, if you left the water running and it was your fault, or you intentionally dumped water on the floor and that caused the mold, that's not. It has to be a covered loss. So there's damage to the roof because of a covered event, maybe lightning or hail, or there was some plumbing that was covered. So it has to be from a covered loss. It can't be just maintenance. It has to be a covered loss. And then the mold comes from that. The problem in Texas is there was no time period specified in the contract to how long after the covered loss the mold had to be discovered to be covered. So Jose Montemayor, he's the one who spoke to our class. He talked a lot about the mold issue in Texas, and he talked about the use of credit scores in Texas. And it was interesting. He was an extremely insurance industry supportive commissioner. And I don't think it's because I don't think he had any ties to industry. I really think it was his background. You look at his training, he's a pretty amazing guy. He wanted to become insurance commissioner, but become insurance commissioner, you had to have an accounting background, and he didn't. He had a very mathematical, quantitative background. And so he just went out and got a CPA. I mean, it's pretty amazing. Smart guy. It's not an easy exam to get if you don't have an accounting background, but he just went out and got that. I don't know how he got the accounting hours. I mean, it's really just an amazing guy. And I think the reason he was pro-industry on this issue is I think he just looked at the math, he looked at the numbers, and he was just convinced that the industry had the math on their side. So what did he propose? A cap on coverage for mold remediation, but policyholders could buy additional coverage if they'd like to. So there's that $5,000 limit. It applies to the testing, repair, and remediation. So the testing costs also cut into that $5,000. And really critical, it also includes the additional living expenses. So additional living expenses, these houses are being gutted, so it could be a month or more. You think about 3 or 4 months in an apartment, probably $1,000 a month. You're going to spend through that $5,000 pretty quickly. If you want more than $5,000, you could buy an additional 25%, 50%, or 100%. Remember, the average claim was $38,000. So even if you bought 100%, the most you can get is $10,000 of coverage. So you could get multiple claims in a year up to that limit. So, but still, it's a restriction. Now, I read that and say, well, the industry should love that, because that's going to cut the severity from $38,000 down to $5,000. That's a pretty hefty drop. However, the industry did not like that. Who supported it? Well, the supporters were all those real estate people. They just wanted a solution. They saw it as a good compromise, consumers, insurers, most. So when we looked at the average claim, that was $38,000. The median claim was much lower than that. So that $38,000 was pretty skewed, And so that's the argument they're making. Most people who have mold issues, it's far less than $5,000. The coverage more than covers them. It's those ballard kind of cases where you're seeing these massive, multi-million dollar claims. And so that's skewing it. So most people will be fine. It will keep insurance rates affordable without killing the insurance industry. If consumers know that only $5,000 is going to be covered, then there's going to be this morale hazard that they're going to take better care of their houses and know that they need to look after their house and not just assume that, hey, if I've had water damage, hey, if there's mold, someone else will cover it. They actually have to go in and check and be careful. They also think that if you don't do this, homeowners insurance is going to become completely unacceptable in Texas. They won't be able to, this is really the real estate industry. So it's going to make homeowners insurance unaffordable. They also argued this whole thing is related really to the Ballard case, hitting the press, scaring people to death, that their animals and their kids are all going to end up really sick. The opponents, you notice it says the opponents and the other opponents. So who are the two groups of opponents? Well, one group are these consumer groups. Now, what is a consumer group? You're all consumers, so I assume you're all a member of a consumer group somewhere, but probably not. Usually consumer groups are back-funded by personal injury lawyers, the ones who make money suing insurance companies. There may be some legitimate consumer advocates out there that don't have a financial tie to the legal profession, but they tend to be the lawyers. There's a lot of kind of good sounding consumer group kind of groups that are either funded by personal injury lawyers or funded by the insurance industry, and they have a front that makes it look like they're out there fighting for the consumer, but there's usually someone with a financial incentive behind these groups. So this opponent is really the insurance industry, and this group is the legal groups that are suing insurance companies. And so they're saying, hey, free markets. Let the insurance industry decide on rates and coverages. Let them deal with that between insurers and consumers, and don't let governments say. Also, property and casualty insurance, homeowners insurance is not health insurance. It's not an environmental protection. It's not a home warranty. So the standard HOB policy needs to be worded, define it more clearly, because Texas is very different than other states. Insurers are unfairly being held liable for losses for things that aren't their problem. It's bad construction. Get the construction industry to fix their problems. There's question whether mold really is a health hazard if it's not been inflated. The media attention and anecdotal evidence. So you have the Ballard case. So people are taking that and extrapolating it to all people and say, well, we're all in danger. That they think's been blown out of proportion. And they want to fix this remediator problem and get rid of the fraud there. The other opponents, which are consumer groups, they say, hey, we already have the highest rates in the country. There's no reason they should charge more. They should cover everything. So the rates should be coming down, not going up. This ignores the actual numbers. The numbers, I can't assure you. I've actually got some graphs I could show you that Texas rates are higher directly because claims in Texas are higher. It's not like, in fact, Texas homeowners insurance make less money in Texas than they do in other other states, even though they're charging much more than other states. And they show that because of all these Lloyds, they're pricing their policies above the benchmark, but that's because the benchmark rate, the insurance industry would argue, are way too low. Insurers could limit the cost for mold claims by responding more quickly. That's the argument with farmers. Since most homeowners insurance carriers have moved their business to Lloyd's, there is no state regulation. A cap of $5,000 they say is inadequate. Now this is, I think, a ridiculous comment. They say it shifts costs from insurance industry to consumers. Well, the problem with that comment is insurers always pass their costs on to the consumers. That's what insurance is. If the average claim is $5,000, they're going to charge $6,000. If the average claim is $10,000, they're going to charge $12,000. That's just the nature of insurance. So they can't. That's their business. They always shift costs from the insurance industry. I don't know who's making this complaint that somehow insurance companies are paying $20,000 in claims, but the policyholder is only paying $5,000 in premiums, and somehow that's a business model that's going to work. Obviously, if claims are $10,000, insurance companies are going to charge $12,000. Insurance companies will always charge more in premiums than the average claim. So I don't understand this comment. It doesn't make any sense. The insurance industry obviously is shifting costs to the consumer. That's the nature of the insurance business. It's a cost-plus type of model. Lawmakers should close the loopholes on Lloyd's, and they should not let insurance companies walk away from the market. That one I think is pretty radical too, to tell a business you cannot leave this business. You must stay in this business. And you know, is that constitutional? So they may not tell a company you can't leave the state, but what some states have tried is if you leave on homeowners, you must also leave on auto. And auto insurance is quite profitable in Texas. And there are companies who are in Texas on homeowners and losing money because they don't want to lose the auto side. A lot of consumers like to have their auto and homeowners with the same company, and then that gives them advantage over firms like Geico and Progressive that tend to only do auto, although I think Progressive's starting to get into homeowners. But so there's the argument. So you can see where we're going here with this. Let me real quickly show you the final result, which is not much different than what we saw in this article. The resolution, Montemayor, says that we're going to have this cap, so most insurers will have protection, but the coverage for expensive procedures will be eliminated. Those who want full mold coverage will have to pay a higher premium, even in the state that's already the highest. The insurance industry attacked the plan as too little too late, which I'm still surprised. It seemed like what Montemayor proposed should have been a good deal for the insurance industry, but they really just didn't want to pay for any of this. Again, the number of claims and the average claim. So I think the insurance industry cap on 5,000, that helps us on severity, but our problem is frequency. I think the frequency actually came down just because it wasn't in the press anymore. I think this whole thing just kind of went away. The industry had sought to eliminate mold coverage entirely. Consumer groups also criticized as giving too much protection, giving away too much protection from homeowners. The TDI indicated that the cost of mold-related claims had increased ninefold this year. All three of the state's largest insurers had quit selling. So they went back to that most limiting policy that we talked about, very restricted coverage, and not offering that broad coverage that we talked about. So 96% homeowners have HOB policies, and the industry is moving back to a much more restricted policy, the HOA policy. It's the Texas homeowners who will be forced to pay the price in terms of high insurance premiums and less coverage. But that's the way insurance works. There is no magic magic pill here that homeowners can get this massive amount of coverage and not pay more in premiums. It just doesn't. There's no way to do that. So Montemayor, he retains some of the existing mold coverage, but only if it's a water leak and reported. So here's that limit in time. Must be reported within 30 days of when it's discovered. So homeowners who discover it, they've had a leak, and they don't report it, they take care of it themselves. They're saying, okay, you can't let this fester and go on forever and ever and ever. So that was the solution, very similar to $5,000 cap, very similar to what we talked about in the other article. So what I want to do from here is I want to stop here because I made you watch those longer videos, so I want to keep this about 40 minutes. So what I want to do here is I want to go back and tie this back to storm surge. Let me real quickly on storm surge. You see the key here is what does the policy say? And then the key is, how did the courts interpret the policy? So you see, farmers went to court with the Ballards, and they said, this is how we see the policy wording, and this is how we price our policy. And now the courts are saying, no, that's not the way the policy is meant. And so farmers saying, we either need to increase our rates 40–60%, or we're getting out of this entirely. So when we get the storm surge, what we're going to see is that the policy is very clear that homeowners insurance does not cover storm surge, and yet the courts were tempted to reinterpret that and make insurers liable for storm surge. So we'll get into storm surge more. So next class, what we'll do is I'll walk through the outline and the notes on mold, and then I'll walk you through an article on storm surge, and I'll help you make that connection. So very, very key for insurance. The states write the policy language. They mandate it by law what policy language insurance companies must use when they sell policies. Actuaries price the policy based on that language and how they think it's going to be interpreted. The legislator wrote the language, but the legislators don't interpret it. It's the courts that interpret it. And the courts may interpret it very differently than what the legislators intended, and definitely much different than what the actuaries were pricing on. So that's the connection between all of this, between mold and storm surge. So we'll make that connection better in next class. So this is somewhat of an introduction to these really complex and heated issues in insurance.